morning, ladies and gentlemen. My name is Vasil Dikov. I am a Senior Account Manager with GDMFX, and today I'll be bringing you today's market outlook. We'll be starting with the North American markets and the events from there. We had the ADP employment change, which came out 9,000 better than expected at 179,000. The market PMI composite was 0.6% better than expected at 51.8. And the market services PMI was 0.4% better than expected at 51.4. The ISM non-manufacturing PMI was 0.5 weaker than expected at 55.5. The Atlanta Fed President Dennis Lockhart said Tuesday he would not rule out an interest rate hike in September and said he was watching closely for signs of positive asset bubbles. We also had the Chicago Federal Reserve President Charles Evans, who said that the US economy seems in relatively good shape, making it possible for the US Central Bank to raise interest rates once this year. During the briefing, Evans did not specify his preferred timing of a rate increase. Today we'll have the employment changes and the initial jobless claims from the United States. The Dow Jones was 4 points up, snapped its 7-session losing streak. The Nasdaq was 17 points up, the Dixie was up to 95.62 from 95.20. The big movers was the US dollar versus the Canadian dollar, 35 pips down, and the US dollar versus the Swiss franc, 80 pips up. Today, we're going to have, as mentioned, initial jobless claims and factory orders for the month, and on Friday, we're going to have the NFP and unemployment rate from the United States. Moving on to the European markets, we had the market services PMI for the Eurozone for July 0.2, better than expected at 52.9, and the market PMI composite for July 0.3, better than expected at 53.2. Today we had the SECO consumer climate reading from Switzerland 1 point better than expected at -15, and we were expecting the European economic bulletin. Moving on to the UK, the market services PMI was 47.4, in line with expectations, and sterling ended the trading day with no major movements compared to previous days. However, the currency had large fluctuations before the Bank of England's interest rate vote today. The sterling's performance will be greatly affected from the Bank of England's decision on interest rates. If they decide to cut it, it will put great pressure on the currency to the downside. However, with the possibility of an interest rate cut priced at almost 100% on the market's decision to leave the rate unchanged may surprise investors and have a shock effect. Despite the interest rate vote itself, it's very important what type of monetary policy stimulus the bank will introduce. There are two options, the first one being a sledgehammer approach advocated by the bank's chief economist Andrew Holding, and the second being a more muted approach. The increase in asset purchasing is also an interesting factor to watch today. The FTSE 100 lost 13 points and closed at 6,590 yesterday. The big movers were the pound versus the Kiwi, 125 pips up, and the pound versus the Swiss franc, 100 pips up. For the rest of the week, today we're going to have the Bank of England interest rate vote, Bank of England asset purchasing facility monetary policy summary. The Governor Mark Carney is going to be giving out a speech. We're going to have the Bank of England minutes, which are going to be released, and the Bank of England quarterly inflation report. Moving on to Asia, we had the foreign investment in Japan for July 29 fell to 312.1 billion yen from the previous of 678.7 billion yen, and the foreign investment in Japan stock 175.1 billion yen, more than the previous reading at -95.5 billion yen. The Bank of Japan Deputy Governor Kikuo Iwata said on Thursday that a comprehensive review of the central bank's policies due next month would focus on monetary transmission mechanism and obstacles its stimulus plan is succeeding. The review is not meant to transmit a specific direction for future monetary policy, Iwata said in the text of a speech. Iwata reiterated that the Bank of Japan's readiness to ease monetary policy again if needed, but the worst sell-off in government bonds in more than 3 years on Tuesday shows investors are worried that the Bank of Japan may scale back the pace of its quantitative and qualitative easing via buying government bonds and riskier assets. The Nikkei 225 was 25 points up. The biggest mover in the Eastern markets was the US dollar versus the Chinese yuan, 80 pips up. In the Pacific, we had the retail sales from Australia seasonally adjusted, which came out 0.3%, worse than expected at 0.1%. On Friday, we're going to have the monetary policy statement from the Bank of Australia. Finally, the commodity sections of the market. We had the EAI crude oil stock exchange increased by 1.4 million barrels for the period in comparison with the week ending of July 22nd. The US crude futures bounced from 14-week lows on Wednesday as an unexpected draw in gasoline inventories last week helped temporarily ease some concerns related to the prolonged supply glut in global energy markets. Gasoline inventories declined by 3.3 million barrels for the week ending on July 29th, considerably more than the analysts' expectations for a modest 0.2 million draw. Gold prices were a little changed in North American trade on Wednesday, holding near a 28-month high despite data showing the US economy added more private payrolls than expected last month. For the year, the precious metal is up with nearly 28%, boosted by concerns over global growth and expectations of monetary stimulus. The S&P 500 index had a range of 13 points. It is at 2,157 right now. Gold had a range of $13 down to 1,352 right now. Silver had a range of 36 cents. It is at $20.60 right now. Crude oil had almost $2 range up to 41.08 right now. And natural gas is trading at $2.82 with a range of 14 cents. On Thursday we have the EIA natural gas storage change, and on Friday the Baker Hughes oil rig count. That is all from me. Thank you very much for your time and have a great day.